Bitcoin, crypto, morning tea. Hey. Good morning, everybody. My name's Matty B. That is Scaramucci's. This is your morning TA. A brief glimpse into the crypto markets where the sun's shining, where the wind's blowing. All the humble opinion of this piano Zamboni bringing the data. The FOMO index has jumped down to 20 from yesterday's 27. Bitcoin dominance 60.4%. 24-hour volumes 106 billion. The overall market cap 2.69 trillion. Give or take 100 million. Well, I wouldn't say it's been a pleasurable weekend. Kind of felt like we were talking ourselves and everyone we know off the capitulation ledge. But that's not the only thing we talked about. So it should have come as no surprise to anyone in this boutique community. When Bitcoin price action, well, she had a little dump. We need to see price action turn this level into support and start back up, because if I say if she can't do that, we'll likely retest this channel support down 78K-ish, which would then put us at a new lower low, possibly a double bottom, and at the mercy of the robot quant AI sell algos.
That which once with will get candlestick.
Ah, yes, the angelic voices of the children's choir of enchanted works, letting us know that a juicy wick has been sacrificed to the gods of wickedness, down at 78.5. To see price action get back up and candle close our channel of eternal monotony up or above 91.6, which is also the 38.2% fib. A failure to the upside would clock in another lower high and trigger the robot quant AI sell algos to take us back down to this channel of Ascension's resistance, now acting as support at 82.7-ish. Lord love a duck. She didn't do just that. After failing to hold support, the 20 moving average, she broke down past her and the 50, where we collected our breath for the better part of a day, then collectively let out a bearish sigh and collapsed down, finding a bottom and a bounce at 79.9, and have rallied somewhat back up to a time of production 83.6 underneath all three moving averages, and in the southern region of our land of no man. I'll be keeping my papers on this local lil rally continuing, which as of right now is breaking up and out of this cute little bear flag, whose price probability plays out to 74.6-ish, which is also the support of this channel of descension. Now over on the ding dong, you can see we did break down and out of our triangle of neutrality and have fought back up to bang our heads on the 200 moving average. And anyone who's watched this channel long enough knows that this 200 moving average is the barometer of bearishnicity. Above her, we're okay. Below her, we're bearish. plain and simple. My delusionally bullish outlook for today would be to rally back up and into this triangle at or above 86.3-ish, which is also the 50% fib and would carve out a bullish engulfing candle, signaling continued bullish prowess for the rest of the week. Is that a data alert? Yes, it is. Looks like we have what some legacy analysts would call bullish divergence on the RSI, where price action has made lower lows while the RSI has made higher lows. This is classic bullish divergence of the reversal kind. Quick look at the Wookiee. Sees we did close the candle hella red, almost candlesticking this glorious wick, and are stuck on the 61.8% fib, which is a nice place to begin our fight back up to the only level I'll put my bullish chapeau back on. That is up and over our old bull flag support, now acting as resistance at 96K-ish, which is also the 23.6% fib. And I'd say maybe some positive fundamentals could drive us up to that level. But after Friday's Thank You Fest, it's quite apparent that even when we hear the most bullish news Bitcoin could ever possibly hear in its existence, the price tanks. Well, I suppose we have to hope for the astrology on the charts to get us there, because I don't think we'll ever hear anything more bullish than strategic Bitcoin reserve. Ever. Would you look at that, my friends? The sun's up. It's another beautiful day here on planet Earth. A day none of us are guaranteed. Not guaranteed these days. Yeah, we're lucky enough to have anyway. So get out there, knock 'em dead. And remember, we're playing the same game as our psychopathic elected elites. That's right, it's the long game. So zoom out and have a fantastic day. And we're going live right away, so grab yourself a coffee. Join me for a quick one, and by all means, sing it with me now. Or on the banks of boom to spang, Bitcoin, crypto, morning tea. Hey, cha-cha-cha-ching. Ecamm, come on, get your shit together already here. I pressed it 3 times here to switch the old scene here, and you're just dilly-dallying like price action. For the love of God, is there anything more bullish that could be said? As like when I kind of heard that back, I'm like, is there something that could be bullish, more bullish than the strategic Bitcoin reserve? I don't think there is. I'm trying to imagine something bigger than that. I guess, yeah, if they said, and we will buy this amount of Bitcoin every year. Well, when these things happen, I start thinking, do we really want to align ourselves with these psychopathic elected elites? It is counterintuitive to, the ethos of Bitcoin. It does theoretically pump the bags, but, not really anymore, if you know what I mean. This is the type of fundamentals that should basically rocket Bitcoin into the stratosphere, and then you don't see it. And it gets people confused, maybe thinking that everything's over. I was going to make it a top signal, one of those. I've done 4 top signal videos already, but we're way off the top now. So to make it a top signal wouldn't have the same impact. However, it's important to wrap your head around the fact that
in a bear market, all the bullish fundamentals in the world won't pump the price. Remember, like you could hear, you could hear anything. You could hear Bitcoin Strategic Reserve, and we're going to start buying stuff. That wouldn't do anything to the price. And in a bull market, generally, fundamentals, anything, it's almost like someone who's really ticklish. It's like the market is super ticklish, and you go by the armpit and they start cracking up. That's what bullish fundamentals usually do in a bull market. But we're kind of seeing what happens. Look at the 82.7. It's so weird. I made that video. We talked about this. That was last week, on March 5th, I think. And here we are, 82.7. And when I made that video, make it like the price action being at 82.7, people know like that. I get it. Hey, you're on YouTube. Always be bullish. You got to speak the truth every now and then. So 82.7, here we are. Not that we wanted to be here, but it's better than we were last night. 79. But what I'm getting at is what scene is this? What I'm getting at is that all the fundamentia. Don't get me started, Sneaky Pete vaporizers. He says, have no fear, Carney is here. Because we voted Carney in, just like Kamala Harris. Didn't we? That's what we do in this illusion of democracy. We vote people in, right? Don't we? Yeah, apparently we don't. That's why this market, the illusion of democracy is so fascinating, because they just got to move someone into position and then get rid of them, and then the second one puts up. It's like that. I don't like that analogy. You don't have to be faster than the bear. You just have to be faster than the guy who's behind you, or not faster than the bear. I don't know. Anyway, what I was getting at here is that the price action, as bad as it can be, it tends to go a little more painful than you have, right? And if you've been on X at all, or as much as I have, it's the sentiment on X is incredible. Like, now let me know if you've experienced this or not experienced this, but on X, the sentiment is the lowest I've ever seen in my whole Bitcoin journey. I've never seen it so low. And it's fascinating because, it's is it expectations? Is it the disappointing of the expectations, so to speak? That is tanking the sentiment, because I've never really seen it. Is Randy Hipper still here? Randy, have you noticed the sentiment so low when are going through your feed? It's crazy. It's like I almost don't see anything that's bullish, which to me, as a contrarian investor, is actually bullish. When you don't hear anything bullish and everyone is like dogpiling in on the worst of the world, the sky's falling, it's generally a pretty good point to sense a reversal. And speaking of reversal, I mean, I haven't seen one of these in a long time, which is just pretty armchair contrarian. It's always much worse than you can imagine before it's much better than you can have ever imagined. That's true. I like that. We haven't seen this in forever. I don't even know if I've ever really seen it on the daily too. We have lower highs or lower lows. My mind can't really look at it and decipher lower lows, and we have higher lows on the old RSI. That is classic reversal bullish divergence, which means the bearish swing will reverse, hopefully to the upside. So I haven't seen this in a long time, especially on the daily chart. You know, it comes about on the 4 hour noisy little so and so, but who cares about the 4 hour little noisy little so and so? It's like it's the yip yappy little person in your ear, right? But the daily, when it starts to flush out some bullish divergence, it's more of an indicator that I tend to listen to rather than the 4 hour chart. Mickle 911, thoughts on Mark Carney, bullish or bearish? I'm really bearish on Mark Carney because I'm just bearish on the illusion of democracy, really. Like when someone quits, stays afloat for 3 months just to kind of exit stage right and then enter stage left, you know, a WEF central banker. I mean, it doesn't get more bearish for me anyway, but this goes back to sentiment and the strategic Bitcoin reserve. The crazy part about being in the crypto sphere at this moment in time is that we forget how much of an echo chamber we're in, and this is basically our whole world to a certain degree. I mean, there's life, you know, there's relationships, there's squash, there's lots of things outside Bitcoin, but we're so hyper acute to the fundamentals, the technical analysis, all that. Like, no, like you think about it. How many people in your life, like let's take your baker's dozen of family and friends. How many of them know that what a strategic Bitcoin reserve is, B, they knew one was implemented, and 3, knows even what Bitcoin is. You know, so we tend to think that everyone, how can everyone not be watching this crypto summit at 3:00 in the afternoon? You know, like it's basically the Super Bowl of Bitcoin. That was me on Friday, watching it, yawning, the thank you fest. Just wanted to thank you. Yeah. And do you want to say something? Yeah, I just wanted to thank you as well. What about you? Would you like to say anything? Yeah, I would. I just, you know, first off, I just want to thank you. So the big thank you circle jerk there at the Crypto Summit, I was watching it, and it was quite disappointing that, you know, it's just disappointing that they didn't have any significant information to absorb. But the fact that it was implemented is understandably mega bullish. However, it's not reflected in the price, so nobody cares, right? If number doesn't go up, doesn't matter what anyone's saying, it becomes instantly bearish, right? That's what happens in sentiment. Anyway, on my Twitter feed, it couldn't be more bearish if we're in the depths of a bear market at 22K. I remember 22K. It was way more optimistic. You know, to a certain degree, people are more optimistic in a bear market because they know the future's bright. But when we're sitting here on the cusp of, is it over? Is it over? Did we peak out? Is everything done? People are a little more on edge. I get it. So am I, because I'm always looking at these factors. What's this? I'm always looking at these bull bear market factors to see past cycles, what were some signals that always repeated. And I think I found one that I want to keep updating, because it's based on this simple rejection off the top. So when we go back, and I'll backdate check this, but if we do I have it set up here already? No, I don't. So let's say that this candle close, we see a bounce, right? Let me get this a little more clear for you all here. Does it look better like that? Yeah, it looks better like that. So let's just draw a fib from our candle close top to what would be our bounce. So what's significant is that the high candle close is our all-time high. So it's got to be the all-time high down to correction, and then it's bounce, right? So when we see that bounce, And now we would be bouncing at, until there's a lower candle close, our lower close would be this 79.9. Now the 38.2% retracement back up would put us at 89.6, which is also, so this is what I want you to remember. The 38.2% recovery. Now, historically, when we go back to this right here, so we have the candle close of the all-time high. Oh, you can't see that. Right there. That is the candle close. We draw a fib down to what would be the bottom, and then the attempt at a recovery. It went up to 38.2% fib, then got denied, and that was it. We were in the bear market. So that's the 2021. Now let's go back to 2017, make that all real nice and gloriously looking and all proper like, so it's an enjoyable aesthetic there. So let's see, it's hard. It gets wonky down in 2017. But here we have the candle close high of the market peak. And then we have the candle close low of where we tried to recover right here. And where did it get denied? 38.2% fib, 16K. It seems forever ago. So the past two bull markets, off its high, recovered only to get denied at the 38.2% fib in the past two markets. So, I mean, it's 2 out of 3 data points. Really, is it enough? It's enough for me right now, really. So if this were to play out in this fashion, because we can only go from, our current all-time high, 109, right? If there's another all-time high, then we'll change everything. If there's another candle close lower, we will change everything. But for now, the most important level to get up and over in this whole bull run right now is 89.6-ish. This is a 38.2% fib. We do not want to see a rejection at this 38.2% fib. Not the end of the world. I'm just saying, in the past bull runs on the weekly chart, from all-time high to correction to rejection, 38.2% fib. It happened both times, and then we're in the bear market. And, to me, it kind of feels a little... It feels a little like we're in a little bit of a bull market denial, like a bear market denial, like we're still slightly optimistic. One House Production, hit the likes. It's free and helps break the algorithm. I don't know if this channel can break out of the algorithm, actually. It's heavily. They just shut this down around noon. This whatever happens at noon, that's it. That's why sometimes I do not the live video, like thinking I can maybe trick YouTube. It's like, hey, it's not live. It's evergreen, blah, blah, blah. But you can't trick YouTube. And so are we in that that bear market denial where we're like, no, this is going to happen and this is going to happen, right? This is the emotional state of the bull market. We end up wondering, is it over? Maybe 24/7, right? We look for all these indicators. Well, this happened before, so is it over? Are we going back into a bear market? And I think what's driving people crazy for this bull market is the simple expectation of it, right? In 2021, 100K seemed an insane all-time high. It would have been like the euphoric all-time high. So now hold on a second. I'm going to put that right there about euphoria and all-time highs. We didn't hit it. So we weren't so disappointed as we were in complete denial, right? It's like, no, 100K. We're goddamn guaranteed 100K. God damn it, right? We were kind of living in that. And as the price went down, we became into, the denial set in. No, 100K, we're guaranteed. And so we didn't really get a chance to be disappointed that much because we were just kind of unraveling. And there's an important metric I wanted to share too. Last bull run, 2021, the 40K marker from 69 was the all-time high, 40K. That was like this weird bullish bearish fulcrum point for a lot of people. And had you sold before that, you were okay. Had you not sold, or if you didn't sell at 40K, if you were a buyer seller, I don't. This doesn't apply to me because I'm holding for 8 years. It doesn't matter. But this is an important psychological metric. That 40K basically made you a round tripper. Right after 40K, you started grasping for more denial. No, and then all of a sudden it's like yeah. And then we were at 20K, and at that point, everyone was around tripping. And if you followed a bunch of your favorite content creators, they all basically round tripped from Ben to DZ to James at Invest Answers. Who else do I watch? That's about it. Do I watch anybody else religiously? Not really. Anyway, those guys became round trippers. I think almost everyone did, right? But that 40K was like everyone. It was what is it? What is it? A Faustian wager? It's like if it hits here, I'm going to sell. Right? Everyone kind of promised themselves. I remember that in 2021. Everyone promised that 40K they were going to sell. And then, of course, it hits 40K and you're like, I'm not going to sell. It's going to come back up. And, of course, it goes back down. But why this long-winded talk about 40K is that based on 109K, our all-time high, right here. Oh, you can't see that. Come on. How many screens do I need here to... 109, that Faustian wager, if I'm even using that term correctly, I don't even know, is 62.6. Just to put it in perspective, the same percentage down from 69 to 40 is 109 to 62. So let's see how far that is from all-time highs. 62.6. That is a 40% correction. Faustian bargain. Thank you, Bruce Mai. That's a 40% correction from all-time high at 109. That is so 60, just to serpent eats its tail. This mark is the psychological level of most people's round tripping dilemma at 62.6. If it gets there. There was talk that we'd never see 80,000 again, right? So now that 62.6 is being talked about on this stream anyway, this would be that level where you become a round tripper again, right? And the tough part about that is that between 62 and 70, everyone's still thinking, well, it's probably going to go up. It's probably going to go up. 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 And then 62.6 comes and you're like, oh, geez, I kind of promised myself I would sell by here. If you're a seller, right? If you don't want a round trip. But then my question is, so we'll revisit that too as well. If it, God forbid, gets to 62.6, are you trying to tell me, like imagine this. So I already did this a long time ago, 62.6. See, my spidey senses were tingling about that number because I drew this in a long time ago. And this would be the mother of all head and shoulders pattern. But this is where the TA starts to get bizarre and the cycle starts to get bizarre, because if this was the mother of all head and shoulders pattern, let's go 62.6. Take the pulley, slide it all to the breakout point, and then we're all at 21,000. Like, I mean, there's a hell of a lot of support down there. That would be that would destroy the cycle essentially forever. To go back to basically the previous cycle's bear market, it's just not going to happen like that. But that's where 62.6 would lead us. And if we ever got to 62.6, we would build out this mother of all head and shoulders pattern. I kind of remember there was a mother of all head and shoulders. Yeah. Run this back. I remember doing the TA back here, this mother of all head and shoulders pattern. So let's just so we can see, back check it here. Take the bowl, you slide it all to the breakout point, and then we're all at 3,000. Yeah, well, it didn't go to 3,000. It went down to, can you imagine the bear market at 3K? Anyway, 62.6 is that psychological so-and-so that we'll all have to get over or just prepare for it. I mean, most people have said, it'll never get here, it'll never get there. And I hate when I hear that, especially from analysts that I have respect for. And I guess maybe the only one I really think is smart, like they're all smart, but the one I think is the smartest is James, because he's an old school dork. And I like to get my information from old school dorks, right? And so every time he says, we'll likely never see this price again, I'm like, God damn it, shut your mouth. Because we always do, right? As soon as you start saying, never say never, that's when things get a little bit shady and we hit those prices. So I'm not going to say we'll never see 62.6 because that's just, I just don't want to say never. Now, the thing is about this sentiment, and this is why it's, as a contrarian investor, I search for bearish sentiment. I like it. It starts making me ticklish when I hear bearish. Just so one last example. I have a buddy at the squash club. He's a Bitcoiner, and he's also an only coins fan. Nonetheless, he's very invested in Bitcoin and only coins. And if we were to go back and log all our conversations, because we are like two ships, he's coming, I'm going, we'll always like stop and say something. Every time that our paths cross and we're like, whoa, God, I can't believe it. Can you believe the price? This usually sells off. And then every time, vice versa, we get together and we're like, Jesus, it's not looking good out there, is it? Every time we say that, the price usually explodes. And it's the best leading indicator of anything. And yesterday I ran into him. He was desh-fitzing. I was desh-fitzing. Sometimes you like the desh-fitz far away, because if you don't know what desh-fitzing is, it means getting the core temperature back, because you just got out of a steam for 15 minutes. You're just sweating bullets. You got a desh-fitz. Anyway, I didn't notice he was there. He didn't notice I was there. We both looked up and we're like, it's not looking good, is it? So again, every time we've said that has always been the leading indicator of an explosion about to happen.
Make sure you like and subscribe and share this video.